I just put the chart in the Wall Street Beats, Robert.
Saragon.
Thank you. That's what I meant.
Yes.
The indoor top tracer golf league starts tomorrow with Tiger Woods and his that Rory operation bet. Could be a big moment for Callaway. And you seeing Dave and Buster's up 5% a day since that quarter? Jeez.
Yeah, $32. Back at 32.
Yep, right where we left it for dead.
Word's getting around that. Well, I thought it'd go to. I think on that show, I said I think it'll go to 25, and then we'll see if there's a bid. And there was a bid.
There was a bid. It's probably them, but it's there. It's there. And truthfully, I mean, how are you going to get people bearish on that? Like, that was a really bad quarter. There was a lot of bad stuff there. It's hard to think of a downside catalyst from here, short of a liquidity event.
Yeah. I mean, that was
the
pretty
remodels
bad.
have been given up for dead. There's no reason for any optimism. They snuffed it all in the crib. So,
I mean, it was the first conversation me and you ever had about it was like, hey, these guys are terrible at capital allocation. If you can improve that, use the free cash flow you do to buy back your stock at 5 times EBITDA.
Yeah. And
Hey,
so,
Ben,
and that's
you
the
own
bull
another
case
stock.
scenario, right?
Hey, Ben, you own another stock that's having a good day.
Joby.
Which one?
Check out Saragon.
Yeah, wow.
TRNT, if you don't remember the symbol.
Wow. $6. Almost $6.
20%.
How about Joby?
What?
How about Joby? Acting like a champ.
Don't know Joby.
Joby.
Aviation.
$9? Oh,
Joby
$10.
Aviation.
There we
No,
go.
am I crazy?
$10. Double since that deal in November. Pretty good.
Wow, very nice.
Yeah, that's all right if you know. Come on, this is just almost not fair. You're too good.
Oh man. Yeah, stocks pretty green across the board today.
Yeah, it's a good day. Yep.
A lot of green on the board.
If you like it.
Nat Gas having a good day too. I see.
Well, this winter storm that's coming in looks like it's quite cold.
I'll take it. You know. You saw the little debate I had with our boy over the weekend on natural gas.
I did.
The CEO Toby Rice made a comment about natural gas needing to be higher, and I have been bitching about these moron CEOs drilling wells and overproducing the commodity and underpricing it in the free market for years. Because they all talk about their wellhead IRRs. Well, we drilled this well for $10 million and we got IRR of 50%. And then when it all gets said and done, there's no cash for shareholders and the stocks are the same price they were 10 and 20 years ago because they're idiots.
Well, you know what E&Ps are? E&Ps are like retailers. They know how to do one thing, drill. Retailer, they're like, hey, you know what we know how to do? Open stores. Just like these Dave & Buster's guys. Let's open some units. Like, that's what they do. They, hammer and nail everything.
Live, boys. We're live from Saturday night.
All right.
Robert,
Robert, you're kind of half your head's cut off. I want to see that
let me check.
beautiful chin. There we go.
I'm looking at something else. Am I good now?
Yeah, I think so. All right, let's get the show on the road. I'm Benjamin Brey. This is Wall Street Beats. Joined here with a couple hat-wearing gentlemen, Kevin Baker, sad Jeff Macke after his Vikings went down last night, and a happy Robert Marcin looking forward to his Eagles making a run. All right, let's get it going. Jeff, you're talking Canadian retail today. What do you got?
Canadian retail, I'm hiding where no one will find me, Ben, and that is in the Canadian world of retail. There's about 3 companies up there. Aritzia is one of them, baby. They report this week. This is one name that we've talked about before. Kind of a little operation, about a $5 billion rev, split close to even, a little more on the U.S. than Canada, but that's a change. They really kind of specialize in affordable luxury. So picture a young woman who's making a decent living, not looking to wow people with the brand, but actually just have a good looking puffer. She's going to buy that. They own this market. This is another market that a company like Banana Republic should probably dominate it, but they don't for whatever reason. Aritzia is growing double digits, and they're just at that real nice stage of a specialty retailer's life where they're just kind of creating a little buzz, where it still feels like a little bit of a find. The stores are new. They're making nice, fancy stores, and they're all fresh. The CEO who came in there replaced this guy, Brian Hill, who's a little bit of a local legend when it comes to Canadian retail and just consumer knowledge. He handed it over. She took a little while to find her stride. The stock consolidated, and it's been ripping ever since. And I think you just have a situation where we're going to start having a lot of cash flow, a lot of ways for them to put it to work, and they're just a baby. This company doesn't even have an app yet, and they're still doing 30-something% of their business online. It's the opportunity is vast, and you know they report this week, so I'm getting long. It's been a winter for us since last April. It's just kind of that time of year where you go through it, and it's like, do you fish or cut bait with these stocks? And they decided to fish a little more with this. I think it has more to run. Looking at all-time highs again, probably another 20%.
Yeah, I was just looking at the ownership. My old firm, Fidelity, owns 15% of it, so they're growth shop. So, you have the domestic U.S. version here. I was looking at the local. Do you own this, or do you own the CN?
I own the CN.
Okay. And so these guys are only in Canada as of now, right?
They are only in Canada. Their stores are in the Canada and the U.S. They in terms of where you're going to trade them, you got to go up there and buy from 2 guys in a snowmobile with a bag of goats.
Right. No, I asked because the Canadian dollar had a little bump last night when it came out that Trudeau was going to be hanging up his hat, and to stick with the hat analogy, and you could get a bump from that as well. The Canadian dollar has been absolutely steamrolled, in anticipation of Trump making them the 51st state and all. So that's another little like call option that's embedded there. I mean, these guys look like they could do $4 in 27. I mean, you have any?
Yeah, they could, and they don't need that many things to break right for them. And it's one of those names that you're looking for, just kind of, okay, what's the catastrophic failure here? Because they've got a lot of stuff lined up that just tons of runway. They don't even have an app, and they're doing 30% of their business online. Holy crap! I mean, that's both kind of terrifying and just a sign that they have room to grow. They're doing terrific stores that are really well received. That makes them attractive to the malls. So their build out cost is pretty cheap. Their payback is super fast on the stores, and they just got to the U.S. And so it's less about what they can earn. It's if they wanted to stop growing, they could drive earnings pretty fast, but they're going to have enough cash to do whatever they want over the next 6 months or so if things break right for them, and I think they will. They haven't even looked at men's, for instance. I mean, they can just rip off the Lulu model, and there's always a market for people making decent clothing at a reasonable price.
You think, but margins probably kind of, what's your margins idea here? If they don't even have a website yet and all this stuff,
they've done most of the heavy lifting on that back end, so that stuff's going live.
Okay.
The margins are really good. Margins are actually an improving story. I mean, they turned in one of those quarters last quarter that reminds you why you buy kind of these Weasley crap little companies, because just everything was terrific. It's like, it's our margins are up 450 basis points on revenues that are stronger, and we kind of just, the short explanation was we got our shit together a little bit, and we're just kind of, we're got our skis back on track. And so, I think that's the CEO maturing. I think it's the company just doing a little bit of the stuff behind the scenes that maybe wasn't happening before. And they digested huge gains. Another one, Ben, I'm a guy who likes 1 or 2 themes. I like to beat the living crap out of them. COVID babies. This was a COVID baby company where they just made nice kind of comfort clothing, and they took off really big during that era. And they topped right in 21 just with all the rest of them and got knuckled. And when those companies don't die, you have to reassess this now as a mature company that's actually going to exist rather than just a fad.
Right. So, how do you think expectations are for this week?
I think there's still little reluctance after this week. We might have everyone on board, but kind of mediocre. They're going to be, you need that U.S. number to be strong. U.S. is where their bread's going to be better in the future. They're much more of a legacy name in Canada, and they've had some growth problems there, related probably to the currency and just the Canadian economy. So I want to see positive comps in the U.S., but we're going to get double-digit growth on the top line, and it's really just a matter of timing their boutique. So we want to see how their stores were received in New York, Chicago, all those sexy places where you get a little bit of a footprint and specialty in the U.S. Okay. And that's going to come out. That's going to be a Friday supposedly report. We'll see what they do with the news flow, but they're going to, if they hit it right, their news cycle should be really good. Flagship stores rolling out in the U.S., coming online in a meaningful way. It just is a good opportunity for them.
Anything else in retail you're looking at this week?
Everything's working. So holy shit. It's Chewy. We're talking about Dave and Buster's. We're just seeing it. We're at that point in the market where you're a genius if you're buying anything in the mall. We got a ton of different pre-announcement seasons upon us. So typically right around this time of year, Lululemon comes out. They tell us how they did. I think they're going to win. The market's pricing them in to win. So in terms of what I'd be trading here, it's hard. It's again, you look at Aritzia and that stock has been kind of screaming, but I think they have more room to run. I think Lulu's going to be good this year. And I think that it's just kind of spread your bets among the winners and losers. But if you get a lift in something like a Foot Locker, get out of Dodge. Best Buy, that narrative is not going to change for the next couple of years. That stock has been all over the place. You're seeing a good rally. I know you play that from the short side. Would it be a short if it got to 90 again? Probably. Because, it's the idea that no one's buying TVs. Well, that's going to stick.
Yeah. And ICR is next week, the 13th to the 15th. That is traditionally where guys will do their pre-announcement in consumer space, one way or the other. So, that's
got to disclose.
Yeah. And I would guess, and just historically how this worked, because I started my career out in consumer, is that there's a lot of positioning that goes into that, or repositioning. Like if you want to be long, you're getting long. Or, if you want to trim up into that, you're a little nervous because that is like kind of the consumer event of the year.
Yeah, friends and enemies are made for and with Wall Street too, because all the guys that are kind of escalating their names, you'll see a lot of reiterations this week. A lot of, we're bumping up the estimates just a tiny bit. Those analysts tend to remember if they get their face ripped off next week in RCR to disclose bad news.
Yep. All right. Moving on to Robert, AIP. What's happening? The stock is going completely vertical, like it's Dogecoin.
Well, yeah, I was going to talk about two longs that I have mentioned in the past numerous times. One stock I'm trimming, one stock I'm not. So I'm going to go through the logic behind how I trade. So AIP is the first name. It's a semiconductor IP company that licenses network on chip technology. It's very arcane technology. There's hundreds of engineers in the world that do this only. And so it has a nice moat. It has 90% gross margins. It's a cool place to be, except that the company hasn't been able to turn its IP and competitive advantage into any kind of real revenue growth the last 2 years. And they came public with, I don't even know where, maybe in 10 or 12, maybe mid-teens. I didn't own it then. The stock blew up because they missed quarters out of the gate. They grew, but 5%, and they were supposed to grow 25 to 30. Stock went down to $3, from wherever it went to at its open peak, maybe $20. Doesn't matter to me. I own it at 4 and change. Okay. So I talked about it when it was 7. It's now 12 and change. The numbers have been chronically disappointing, although they are starting to talk about finally achieving 15 to 20% sales growth in calendar 2025, which would be a major acceleration. So when I bought the stock, it was 2 times EV to sales. The sales growth was very disappointing. So there's been markdowns in that. Stock has gone up nearly 3 to 4 times. and it makes sense to trim some stock, ring the register a little bit. I do things opposite from most people. I buy when they're down and the chart looks like crap, and I sell it when the chart looks great. Sometimes I sell too early. I'm fine with that. I'd rather sell or regret the first sale out of buy than not sell at all or round trip a name. So my strategy on trimming nice winners, and it's about a 2-year position for me, is to sell 25% if you have a double or triple in the stock. I do not sell 50%. That's the biggest sale for me when the stock starts getting moving. If you have a double or triple, you're in a situation where you're taking out 50 to 70% of your assets. If you let that trade turn into a money losing trade, you're a complete knucklehead. Because if you take that amount of money out of your long, it could go down 20%, 40%. You're still very profitable if the story changes. But I find in today's world, now's when the growth guys are piling into this stock. They're piling into Ceragon too, the other stock I was going to name. So, that's the other. So you sell a quarter, you get half of your money, 70% of your money out. You let the 2/3 to 75% ride in Arteris, and if they start to deliver the numbers, you can have further upside. If they miss like they've been missing since I started owning this thing, I'll be selling it down. I might be selling it at $10, $9. I don't care. As I said, my cost is 4 and change. So it just makes sense for me to roll. The sale is a dynamic thing. If the business is so good it warrants holding for another double, then you just lock down and wait for another big move in the stock if it's fundamentally that strong. So Ceragon CRNT is another one that I've mentioned, and it's just starting to get moving. They're growing 15 to 20%, and that
Hey,
was
Robert.
yeah.
Before you go to Ceragon, I want to show the members the kind of things that happen in the live chat that only the members get to see. So I'm giving a little bit of a. We talked about this over the weekend. We talked about it in the pregame, and this is the AIP, the Arteris chart that you asked me to take a look at. And I love looking at things with fresh eyes. Here is Robert Marcin, the momentum investor, and I know you bristle when I say that, but this is going back to 4-year resistance at this 12 to 27 band, and my experience has been the further back this resistance here that you see in this arrow that I'm showing here. Maybe I don't have my share screen; these are old habits, but you're running into old resistance, and now over the last 4 years, everybody's making money. And so the impetus is on the bears to drive this thing back down. And unless they've got a catalyst coming up that you and I haven't discussed, I don't see what it is. So I applaud you for not, selling more than you are. I was afraid your trim would be more of a sale. And, it's tough to find winners in this world. So you let them run. And I think this is just getting going. The daily looks fantastic too. And, good for you.
Banksy, I've sold when I was a deep value guy and I got my 50 to 100%, I blew them out only to watch them go up 3, 4, 5 times when the growth guys piled in saying now it's a cheap growth stock. So
yeah, I've had the inverse experience too. So, I get it. Holding on to things that turn out to be dogs. So, but good for you. I love it.
On the Ceragon. So Ceragon is breaking out on super high volume. It was a challenge to buy at 250 when we were buying it. I know a bunch of peers in our team bought the stock, so everyone's making money. But I paid half of sales, and that's pretty cheap. So now it's up to 1-time sales, but the stock market is 3-time sales, and this company is growing, 15% next quarter, and then maybe next year the estimate on the street is only 5 to 6%. I believe they'll do north of 10. So it is forecasted to slow a little bit, but they're supposed to make 40 cents this year and 50 cents next year. Now I'm on 25 and 26. So it's not even 15 times earnings for a company that's growing well above the average company. It's in technology. And there's a bunch of ways they could win because they make telecommunication equipment that would really come into play if we ever densified the 5G network to the point that we got what they say we're supposed to get from 5G. Because right now, 5G is crap here in this country. They haven't invested enough money in it. So the 5G signal is crappy. And, they would have to densify the network in cities. They would have to expand rural, and there are monies for that, subsidies for that. But putting fiber in farmlands is not a very strong business model, even with the subsidy. So it never happened, even though there was, tens of billions of dollars earmarked for it. So these guys have a lot of way they could, grow 10 to 15% for a 2 or 3 year period. And that would be a growth stock. So you put a, 20 PE on a 60-cent number a couple of years out, and maybe you get a $10 or $12 stock. So I'm not selling a share. Stock's up 100%, still too cheap. Business is still too good. And in contrast, AIP, they're delivering the fundamental goods. So I'm not chasing it. It's not so cheap that I have bought stock after they've doubled when I picked a ridiculously cheap bottom in the stock, but this is not one of them. So I have a solid position, mid-single digits for a risky stock, Israeli company, So if a missile ends up in the wrong place in Tel Aviv, you have to worry about things like that. And it's a small cap. So for me, when I do these ideas, they're 4 or 5% positions in my long portfolio. And that's good enough for me. If I get a 3 or 4 bagger out of it over 2 or 3 years, that's what I'm aiming for.
Robert, here's another example. I've got the weekly chart up here, which you asked me to, and 690 is this red line that I've drawn. And again, this is happening with a lot of your names. 3-4 year resistance getting challenged. Watch what happens when this thing closes at 691 or 692, and the ability for this to go north, I think is pretty impressive. So we're seeing a lot of value names turning into growth names, and I know how this works from being on the growth side. It shows up on the screen. I see earnings growth greater than PE, and thank you, coach, put me in. And this is another example.
Yeah, thanks, buddy. I bought this on your. You just have to tell me when to sell it. Like I told you, I'll sell it when you sell it. So. It's been a good stock. And kind of in that vein, real quick, I actually I had recommended Boeing on this show when they did their deal right in front of the election at the $1.40 was the deal, and then you could have bought it in the pre-market $1.45. I punted my Boeing. It was at the one high 70s. It's been a pretty good trade. They still are not out of the woods in any way, shape, or form. Been it was mostly a special situations trade. It's been good. Just another case of when you get a recap, often that's a good entry point for stocks. And another one, just to update on the same concept, is Joby Aviation, which has doubled since about the same time. And they had done a deal, and I kind of told people on the show that it was time to buy that on that deal. So just a reminder that often when you get these recaps and you have some positive underlying, that those can be good entry points. I know Robert had what was the one we did the deal? Was that TAT or what was that one earlier?
Toru Medical.
Yes.
Toru KRMD. We did that. I did that at 230 when a guy puked.
Yeah, you got a better price.
Yeah. You did, I think, 250. It's $4 today, and they haven't had their quarter yet. That one's teed up too, Bakes. We'll be talking about KRMD in a month after their quarter about how good the numbers look and how it's a cheap growth stock again.
Warms my heart.
All right, Kevin, what do we got, buddy? Got anything else?
I do. And again, for members, I encourage you to come on board because no one's crazy enough. Oh, by the way, Bobby, my son, just sent me he played rugby for James Madison, 50-year anniversary hat, so I'm wearing that with pride. And thank you, Bobby. I go through every ETF that's out there. And now it's funny. I just looked at it today. It's just under 4,400 ETFs, which is up about 10%, if I recall correctly, from the start of the year. So even with attrition, the number of things that happen in ETF world, the number of things you could participate in is exploding. And I'm going to show you something that has come up on my radar screen. Full disclosure, I haven't pulled the trigger yet. For members, I will show you exactly how the sausage is made. And when I hit the button and put the buys in, so you can invest with us shoulder to shoulder. If you choose to do your own due diligence, this isn't financial advice. But I had two surprises this week from the ETF search. The first one is Israel, IZRL, and if you told me that I would be looking at a Cathie Wood ETF, I would have fallen off my chair. I still kind of am. But this is the Israel Innovation Technology Fund. IZRL is the ETF symbol. Jen, if you can put the chart up, that'd be awesome. And it's the same kind of thing. We're going up against 3-4 year resistance. The top names here are Fiverr at a 14 PE. So, this isn't crazy valuation stuff. Similar Web. Okay, I thought it was in Wall Street Beats, but that's okay. Mobileye is the third one, or it's in Basecamp. Anyway, it doesn't matter. But take a look at this. Robert mentioned the concerns over the wrong missile, hitting Tel Aviv. But Israel's come back, certainly from October 6th. And I think this is one of the, we'll put it in the live chat for members, and you can see this is a beautiful setup, in my opinion, IZRL. And it's interesting how many opportunities are occurring outside the confines of the U.S., and I want to highlight the ones, and I'll let you know when I pull the trigger and actually do this. The next one is and this is what makes me happy, and this goes against so many different things. This is the Clean Energy ETF, and I don't know if you know this, but I'm a little right of center. And this is the Invesco Wilder Hill Clean Energy ETF, PWB, I believe is the symbol. PBW. And this is stocks like Solid Power, making EV batteries. This is Frey, a Norwegian battery cell production company. This is AMPS, Altus, solar panels for electric commercial, residential installations. And the number 4 position, and pretty significant one, is Joby, Ben Brey's big winner. So I look at all the electric taxi company, and so I look at all these things and I say, by the way, this is the best part. Talk about checking your biases at the door, political and otherwise. This peaked on Inauguration Day, Biden's Inauguration Day. Everybody goes, he's so good for the environment and clean energy. And it was the peak for this. And so we went from 140 down to 18 over the span of his administration. So and the knee-jerk reaction would be Trump comes in, it's drill baby drill, oil and gas go up, and the clean energy plays are dead and buried. I think there's a lot going good for oil and gas, by the way, but this is clearly turning the trend, in my opinion. Again, I haven't pulled the trigger yet, but I am fascinated by this contrary to popular opinion play on clean energy. Last thing I have is this is from our good friend JC Peretz at All Star Charts. If you can pull this up, if we can't, that's okay. Again, I'll show it to the live chat. And he puts up a pretty interesting case that stay with me here, that the Dixie, the dollar index, has had a Fibonacci retracement of 61.8% to this level that we are right now. And consensus has become the dollar's going to blow out, and that's going to be bad for stocks. And he's saying this is a pretty good time for that to reverse. And then the dollar come down, you get a tailwind for stocks right when we're all supposed to be taking a rest after a big 2024. And I don't know if he's right yet, but I haven't seen it anywhere else, and I'm intrigued by it, and I'm going to be adding this to the things that I monitor.
Well, it's down almost 2% in the last couple of days. So, it has had a nice pullback.
We'll see if there's more to come. But these Fibonacci net ratios, I won't go into all that because that takes 7 podcasts. But they tend to get respected, and maybe because everybody's got a Fibonacci screen on their Bloomberg. But it's a pretty picture, and with everybody coming in and saying, we can't have another good year, I'm not so sure. I am not so sure.
Well, I think we'll leave it at that. Come back and we'll check in with us in brand new year. Maybe we'll have another good year.
Banksy, I'm with you on Israel. Last year, I bought 3 Israeli stocks. It was TAT, it was Saragon, and it was Coal Plant, and they were compellingly cheap. And I'm sure they're all benefiting from the Israeli stock market rally, which has been, I think, 70% off the bottom, maybe. And solid technology companies. Israel.
There's more to come. There's more to come, in my opinion.
Well, with niche technology business.
Yep.
All right. Well, we're going to call it there. Thanks, guys, for joining us. Get this going. Brand new year. Take care.
Take care now.
Oh.
I love all the hats.
Got to give a shout out to my son.